As I've been reading the notes and the reports about this, I think back to the digitization of everything in the early part of this century. Should we be thinking about AI in the same way, that anything and everything that could be automated will be automated?
I mean, we have to think about AI in steps. So right now, what we are seeing is, the power of these large language models in coming up with a new interface, a chatbot or some sort of a simple interface where you can throw in data, you can automate, steps of your workflow, but generalizing that everything, will be fully automated is a stretch. And that's where, the market is right now not discerning what are the software entities that are a must-have, that are running your critical systems. We're still running mainframes. Even with public cloud and the 15-year sort of secular growth we had with cloud, mainframes are still around. So that's where sometimes there can be an overreaction in terms of extrapolating the trends. But look, there's no doubt that things will change as a result of these LLMs. And what Anthropic is showing is the coding agent gives you the ability to, come up with new types of software very quickly. And they are actually releasing new products almost every month, it seems like.
So it's interesting. There's a great Bloomberg exclusive on the terminal, and it says, last fall, Apollo Global Management's John Zito, he left an audience of investors stunned. Addressing a gathering in Toronto, he said that the real threat for private capital markets wasn't tariffs, not inflation, not a prolonged period of elevated interest rates. Rather, he said the real risk is software dead. So you're saying that's not the case.
No, in fact, if anything, headlines like this are typically a sign of capitulation and they signal the bottom. So I'm in that other camp where things have gone too far. And look, these companies were trading at premium valuation multiples. So when things come down 30-40%, it's still a higher multiple than your S&P and your overall indices. So valuation compression is a function of growth rates coming down.
Right.
And for software, there's no doubt that you've seen a slowdown in growth rates because IT spend is being allocated to AI right now.
So is that a case that it's just being reallocated at the moment and it'll come back? Like, is this cyclical in nature? Like, give us an idea. Like, I'm curious about, is there something to be made, Mandeep, that some of these companies, maybe some of their products won't be needed anymore?
There could be displacements, and that's where, these companies used to have a net retention rate of 120, 125%, which means 20% upsell every year. That's not happening. Those, even though gross retention is still 98, 99%, the upsell has come down. So from that perspective, the growth rates have come down. They're not growing 20, 25, 30% anymore. It's more mid-teens. And that is where the valuation compression makes sense. But I'm still not in the camp where, you will completely
not RIP, not rest in peace yet for software stocks.
No. It's
Well, if we think back to about 15 years ago, Mark Andreessen of Andreessen Horowitz had this famous essay, "Software is Eating the World." And it was seen as really prescient at the time, and especially looking back as very prescient. Is AI eating software now?
Well, it certainly is having an impact because you don't need as many seats as you need. So a lot of the business models are seat-based. Well, if you're not upselling, that is a sign that you're not adding as many employees and selling your software on a seat basis. It's more consumption, which is why all the AI infrastructures stocks still are doing very well, because Gen AI compute is all about consumption. This is not a seat-based model. And so from that perspective, there is a shift in business model that is taking place, and all these companies have to adapt. And when I look at their gross margins, they haven't come down. If you're investing
for the SaaS companies?
For the SaaS companies, if you're investing in generative AI infrastructure, your margins will come down. That, for me, is actually a sign that you're investing enough that it's starting to show up in the margins. It hasn't happened yet.
You mentioned with the SaaS companies, the upsell, right? That has made them kind of on a tear. Does that come back eventually after the AI spend and build out and all the money that's being allocated now? Does it come back to these companies? So
the upsell is kind of dependent on what are the add-on products these companies layer on over time. Well, those add-on products have to be AI-based. Now you can't, develop old-fashioned products that you had before and hope to sell, because that's not going to happen. So it has
That's
to
done.
That's done. So that's where there is a definitive change in UI that is taking place because of, chatbots and all these interfaces. And so any add-on products that you are developing has to be, in line with the chatbot interface that everyone seems to be piling on.
And a really interesting story by Joe Easton and Henry Wren about legal software firms and other data service companies plunging after Anthropic released this new AI automation tool. Investors worry could eat into much of their core business. We saw shares of Wolters Kluwer, London Stock Exchange Group, Thomson Reuters, Experian all take a hit today. Why is this sector in particular potentially hurt by Anthropic's latest move?
I mean, look, it happened with coding agents and, all the stocks that were DevOps oriented. They took a hit because Anthropic showed what their coding agents could do. So now it's happening in the field of legal analysis, document analysis, that kind of stuff. And that's the thing. What they are claiming is this software was coded entirely by, their coding agent with minimal intervention from a human. So when you
so how does that work? They just tell.
Like create something.
You have a prompt.
Right?
You prompt Claude to do something.
You prompt, and it's a pretty long prompt.
Yeah.
But then the human in the loop is just overseeing what the coding agent is generating, and there's very little code that the human has to add from their side. At least that's what they're saying. We'll have to make sure that is the case.
Well, this is why so many people say with AI, right? It's about humans learning to work with it, right, as a tool and asking it the right things to create things. But it's pretty fascinating. Just final thoughts as everybody's kind of like, oh my God, we're trying to figure out this trade. You're saying kind of slow down. It sounds like to me, bottom line, it's more of a valuation story.
It is a valuation story. These companies were rich when it comes to their multiples. And so as a sector, and right now investors are selling everything in software.
Right.
They're not looking for, is this a critical system or a system of record that you can't really replace with an AI system? They're just selling everything in software. And so to me, this is a sign of, just indiscriminate selling. And at some point, we'll have a bottom.